Good afternoon. Welcome to Silver Signal. If you find this helpful, smash that like button, subscribe for more updates, and drop your thoughts in the comments below. We begin today with a significant development from global commodities markets, where a prominent Chinese trader known for his success in gold has made a decisive move in silver. A billionaire investor who earned widespread recognition by profiting from gold's record-breaking rally has now positioned himself against silver's recent surge. According to a report published by Bloomberg News, this trader has placed a large bet anticipating a decline in silver prices, a position that has already generated a paper gain approaching $300 million. The individual at the center of this development is Bian Ximing, a Chinese trader who has built a reputation for operating largely outside the public spotlight. Bloomberg reports that Bian spends much of his time in Gibraltar and is known for maintaining a low profile despite commanding some of the largest positions in China's futures markets. His rise to prominence stems from a series of bullish trades in gold futures on the Shanghai Futures Exchange, which began in early 2022 and coincided with gold's powerful and historic price rally. According to Bloomberg's analysis, Bian has made nearly $3 billion from those gold positions over the past several years. That performance placed him among the most successful commodities traders in China during the period and established his name within professional trading circles. His success in gold has now been followed by a notable shift in strategy, as he has redirected his focus towards silver at a moment of extreme market volatility. Bloomberg reports that Bian has built the Shanghai Futures Exchange's largest net short position in silver. This assessment is based on an analysis of exchange data as well as information provided by people familiar with his investments. Those sources requested anonymity because the information is not publicly disclosed. While the exchange does not identify individual investors behind brokerage accounts, the scale of the position has drawn attention across the market. The short position itself is substantial and notable in size. According to the article, Bian currently holds a short exposure equivalent to approximately 450 tons of silver. That exposure represents around 30,000 futures contracts on the exchange. This position has benefited from a sharp decline in silver prices that began last week. As a result, Bloomberg estimates that the position has produced a paper gain of about 2 billion yuan, or roughly $288 million. The article notes that this outcome reflects only the current valuation of the position and does not eliminate the risks involved. Silver markets have been highly volatile, and Bian has previously been forced to liquidate some positions at a loss. Despite those earlier setbacks, the recent sell-off has shifted the balance of his silver trades into positive territory, at least on paper. When previous losses are taken into account, Bloomberg estimates that Bian stands to make a net profit of approximately 1 billion yuan. This estimate is based on his holdings and market prices at the close of trading on Tuesday. The report further states that silver continued to slide during Thursday trading and has fallen more than 16%. That move would almost certainly increase the proceeds tied to his short position if prices remain at those levels. This development has placed renewed attention on Bian's trading activity. It has also drawn focus to the broader dynamics shaping the silver market. His actions come during a period of dramatic price swings that have unsettled traders. These movements have prompted renewed scrutiny of speculative positioning in precious metals. While gold and silver are often grouped together, recent market behavior has highlighted important differences between the two. In this context, Bian's move represents a clear shift away from his earlier exposure to silver. Bloomberg reports that before turning decisively bearish, he had previously profited from silver's rise. From August of last year, he built a long position in the metal that generated more than 1.3 billion yuan in profit. That profit is based on calculations derived from exchange data. The transition from a profitable long position to a large short position underscores the scale of the strategic change. It also highlights the speed with which conditions in the silver market have evolved. As prices surged to record levels in Shanghai, Bian began repositioning. He ultimately committed to a stance that now places him among the most significant participants betting on a downturn. As this story continues, attention remains focused on how the position was constructed. Market watchers are also examining how it fits within the broader movements of China's futures markets. In the next part of our report, we examine the buildup of this short position. This includes the timing, the brokerage structure involved, and the surrounding market conditions. The buildup of Bian Ximing's silver short position began during the final days of January. This is according to data from the Shanghai Futures Exchange, cited by Bloomberg News. The article reports that Bian executed these trades through Zhongcai Futures Company. Zhongcai Futures is the brokerage through which he conducts much of his commodities activity. While the exchange does not publicly disclose the identities of individual investors behind brokerage accounts, people familiar with the matter provided clarification. They told Bloomberg that Bian's own trades form the majority of Zhongcai's precious metals exposure. Exchange data show that Zhongcai Futures' silver short position increased sharply over a short period of time. On January 28th, The position surged to approximately 18,000 lots. Just 2 days later, on January 30th, it climbed further to around 28,000 lots. This escalation occurred at the same time that silver prices in Shanghai reached an all-time high. The timing highlighted the precise nature of the move. The article emphasizes that these trades were not incremental adjustments. Instead, they represented a rapid accumulation of exposure. This positioning made Zhongcai Futures one of the largest holders of silver short positions on the exchange. Bloomberg reports that this buildup reflected a clear conviction that the rally had reached a critical point. Despite the volatility and the risk involved, the position was expanded rather than reduced as prices peaked. According to people with knowledge of the matter, Bian's personal trades account for most of the exposure. Products he directly manages for a small number of clients also contribute to the position. This detail underscores that the exposure was not the result of dispersed client activity. Instead, it was largely driven by Bian himself. Bloomberg notes that neither Bian nor Zhongcai Futures responded to requests for comment. Those requests were sent via email seeking clarification on the trades. As a result, the article relies on exchange data and third-party analysis. These sources were used to reconstruct the sequence of events and estimate the financial impact. The risks associated with such a position were substantial. Silver prices had been experiencing dramatic swings. The market environment was characterized by rapid changes in sentiment. The article states that Bian had previously been forced to liquidate some positions at a loss. These losses were due to market volatility. They form part of the overall calculation when assessing net profitability. Despite those challenges, Bian maintained his short exposure through periods of rising prices. Bloomberg reports that from last week, he held the position with conviction. He spread his exposure across longer-dated contracts. This approach allowed him to maintain the position even as prices moved higher. Eventually, prices turned downward. The subsequent sell-off in silver proved decisive. As prices declined sharply, the valuation of the short position shifted in Bian's favor. Bloomberg estimates that the sharp drop since last week resulted in a paper gain of approximately 2 billion yuan. When earlier losses are included, the net profit is estimated at around 1 billion yuan. This estimate is based on prices at the end of Tuesday's trading session. The article further notes that silver continued to slide during Thursday trading. Losses extended to more than 16%. Bloomberg states that this additional decline would almost certainly increase the proceeds. This assumes prices remain at those levels. Bloomberg reconstructed the changes in Zhongcai Futures positions using daily exchange data. The publication cautions that the exchange does not disclose specific details such as cost basis. Because of this, profit estimates may contain small discrepancies. Beyond the numbers, the article situates Bian's trades within a broader market shift. Weeks of dramatic price movements have prompted observers to reconsider treating gold and silver as a single trade. Gold continues to be widely viewed as a hedge against interest rate changes. Central bank purchases and global uncertainty also support gold. Silver's rally, however, has increasingly been associated with speculative positioning. Industrial demand has also been cited as a factor. This evolving perception forms an important backdrop to Bian's decision. His willingness to commit to a large, short position reflects that view. The drivers behind silver's surge were seen as vulnerable to reversal. As prices began to fall, that assessment gained support. Bian Ximing's prominence in China's futures markets did not emerge overnight. According to Bloomberg News, he gained notoriety for bullish gold positions nearly 4 years ago. Those trades coincided with a prolonged rally. They ultimately generated nearly $3 billion in profit. This established him as one of the most successful commodities traders in the country. The article places him among a small group of influential figures. These figures have dominated commodities trading since China's economic boom. Unlike many peers, Bian is known for a highly secluded lifestyle. Bloomberg reports that he avoids the limelight. He has spent much of his time in Gibraltar. His trading activity has still drawn increasing attention. Despite his reclusive nature, Bian has developed a loyal online following. His reflections on investment philosophy have circulated widely. This combination of privacy and high-profile trades shaped his reputation. Before turning bearish, he had already profited from silver. From August of last year, he built a long silver position. That position generated more than 1.3 billion yuan in profit. This period preceded his decision to reduce and reverse exposure. In November, Bloomberg reports, Bian began shifting his silver position. He attempted to identify what he believed was the peak of the rally. These moves were tentative and sometimes resulted in losses. From last week onward, his approach changed. The article states that he held his short position with conviction. Exposure was spread across longer-dated contracts. He maintained the position through rising prices. As silver prices reversed sharply, results became apparent. The sharp sell-off rewarded the strategy. Earlier, paper losses were transformed into gains. Bloomberg describes the outcome as an example of market volatility. The publication also emphasizes limitations in the data. Daily exchange figures allow reconstruction of positions. Cost details are not disclosed. Therefore, small discrepancies are possible. Nevertheless, the scale of the position leaves little doubt about its significance. Exposure equivalent to hundreds of tons of silver is substantial. It places Bian among the most consequential participants. This episode unfolded amid broader discussions about precious metals pricing. Silver's surge has been viewed as an industrial rally amplified by speculation. This differs from forces supporting gold. As market participants digest these developments, Bian's trades illustrate market risks and rewards. His position remains closely watched. In closing, the scale of this trade underscores recent market complexity. A billionaire trader has executed one of the largest silver shorts. The move generated a paper gain approaching $300 million. This is according to Bloomberg News. Bian's trade reflects his experience and risk tolerance. After earning nearly $3 billion from gold, he shifted focus to silver. This occurred during extreme volatility. Through Zhongcai Futures, silver short positions were rapidly increased. Exchange data show expansion from 18,000 to 28,000 lots. This coincided with record silver prices. As prices declined, valuation moved sharply in his favor. Bloomberg estimates a 2 billion yuan paper gain. Net profit is estimated at around 1 billion yuan. Silver continued sliding during Thursday trading. Losses exceeded 16%. Proceeds tied to the short position may increase. Bloomberg cautions profit estimates may vary. Exchange disclosure remains limited. Bian and Zhongcai Futures decline to comment. What remains clear is the scale and timing of the trade. It has become one of the most closely watched market developments. This report is based entirely on Bloomberg News. We will continue to monitor global markets. Updates will be brought as they unfold. Thank you for watching.